Hi there, traders. This is Chris Keene, and this is the weekend wrap. We have a lot to go over because we had a little bit of action, a little bit of exciting on Friday after a rather dull week of trading with Hurricane Sandy moving through the New York area, with the markets in New York closed on the first 2 days of the week, and then we kind of just drifted along sideways on Wednesday and Thursday. But well, not really. Actually, we had a little bit of dollar gains throughout the time. But now heading into the new week, we have a lot of interesting levels to take a look at. Let's start off with the Euro USD. The Euro USD, as you can see, early last week on Halloween, the pair looked like it was trying to make a move higher, and it actually tested the top of this resistance zone we spoke about throughout the week. The pair then promptly found resistance at that level, and then basically traded sideways. I mean, it did drift lower by 50 pips over the next like two days, but then with non-farm payrolls today, its move lower did accelerate to the downside, and the pair didn't just stop at any random spot. It stopped exactly at the resistance level we had marked at 128.25, and if we look at where we came up with that level, it's not really brain science. You can see that this brain surgery, you can see that this level right here has acted as support once, twice, and now this will be the third time. Now, or could be the third time, let's put it that way. It'll be interesting heading into the new week if we have a rebound here. And what's also important about this level is this brown line right here represents the 200-day moving average, and you can see that is what has capped the price action. If we get a break below that level, we'll more likely see a measured move lower that could take us completely through the fib levels. But the first level we would obviously watch would be the 0.382 fib at 127.34, but more importantly, the level that could get it bounced would be the 50 fib at 126.02 from the move higher between August and the end and middle of September. So in the new week, it's all pretty relatively simple. I could say that we more than likely will get a bounce on probably into the beginning of trading on Sunday, and that will be interesting to see what happens at this price level right here, the 128.85 level, to see if we get a bounce, boom up onto it, and then a push back down lower. Let's take a next look at the Great Britain USD. As you can see, the Great Britain USD, let's zoom in on this pair a little bit. I guess I should point out that it does look kind of obvious on the 4-hour chart that maybe it was the 1-hour chart. On the 1-hour chart that it could be a sort of head and shoulders that had formed there in the Euro USD, so that could be what's leading for the push lower. Some traders may have seen that, besides the fundamental news that came out. All right, anyways, let's get back to the flow. So then the Great Britain Pound USD, you can see after just similar at on the beginning of the run on Halloween here, it moved up to test the highs of the resistance, just missed it. I was looking to go short if we had to move up into this resistance zone, and the pair promptly reversed its course, and now is coming right down towards the bottom of its range, which we would say is probably between this 0.38 fib at 160 to the bottom of that low right around 159.70. So this is a resistance zone right here, and if we get a break below that, we can see that the pair could be on its way to test another test at the 50 fib at 159.03. So heading into the beginning of the weeks, it's simple as this. You just watch the price action right here at the 160, 159.70 level. See if we get a break or hold. If we get a hold here, we could easily retrace back to the middle of the range before we have any real decisions to be made. The next is the Aussie USD. The Aussie was a hesitant camper today in today's downfall. It actually fell about 30 minutes, the last downfall, after the rest of the majors, and you can see the pair everybody seemed to do the same thing this week. It moved up to test the highs of its resistance zone. It did look like it was going to break out, but it did drop back down. That's a very bearish candle right there, and you can see that the pair from that point on drifted lower, but we didn't get any real momentum here. And the trade I was setting this trade up throughout the week, as I was looking for either a break of this through the end of the week. I was looking for a break of either the 104.10 level or a break of the 103.25 level to look for a real indication that the pair is moving lower. Currently, I am short from right about here at the beginning of this 4-hour candle, but that was more of taking the momentum of the rest of the following market. And that trade, I will be looking for a move down towards the excuse me, down towards this 103 level, then down to the 102.50 level. And the reason the 103 level is this trend line. I'm not too concerned about this trend line, but if we do get a bounce off it, then we'll know maybe it is something that I'll have to respect in the future. And you could say it's in a triangle again, but this pair has disappointed in those triangle formations as of recently. So heading into in the beginning of the week, we're going to watch the 103 level, see if we get a bounce there, and if so, then we could smoothly move back higher until we probably find resistance right about here, the 103.55, and see in the short term resistance, see if we get a push back down lower. Let's take a look at the New Zealand USD. Basically, it's still following that trend line higher, and it has stopped right back in the middle of its old resistance lines, but it is above the 1.8250 level, which does favor a little bit of topside momentum. But into the beginning of the week, we're basically just going to watch this trend line and a break for the highs here around 82.85 to see if we get any momentum. Break to the highs, we could be off our way to the 83.50. If we break this trend line, we obviously know we would probably be heading back down towards the 81.50 in the short term. The CAD parity party came promptly to an end today. I was looking for a move up to the 50 fib to go short, similar to the pound this week. I was a little too conservative in entering these trades. No, actually, no, the pound I was looking for the move up this resistance level. Just missed both the trades by just a tad. But as you can see, as the CAD almost moved up to the 50 fib, and then reversed. It actually, I guess, did find some resistance at parity, which I thought would become more of a psychological level, which it has been in the past. But it's interesting that the pair did finish above the fib level here at 0.9943. So until we get a break of this fib level and break out of this fib range, we could just see consolidation. But we probably could see consolidation even though, because any move down here is going to find significant resistance just shortly below at 0.9885. So we could see a little bit of consolidation in this pair. If we break below the 0.9885 though, we could be on our way down to the bottom of the range again. And if we break above the highs, we would probably most find significant resistance at the 104.0. So basically, we're going to probably see consolidations between the top of this 50 fib range and down here heading into the next week. The JPY pairs moved up again as the yen normally trades has the purest reaction to news, and the pair probably most likely jumped higher because of the better payroll number limits the horizon for quantitative easing and may see further dollar strength. And then, I mean, I'm thinking today will probably have to be reconsidered when most market participants re-enter the market, because I don't think easing is going to jump off the table the next day or so. It'll take many good non-farm payroll reports, but the bias could be switching. The one yen pair I want to take a look at into the new weeks is the CADJPY, because once again the pair has hit the top of the resistance zone here. 0.880 which is the 0.8092, which is the 0.688 fib combined by 0.81, and it would be interesting to watch right here to see if we get another move of this range, because you can see we've gone 1, 2, 3, 4, 5, 6, 7 trips from bottom, top, bottom of this range. So there is strong resistance support, and the rest of the yen pairs, we just you can see that the Great Britain JPY moved up to touch the top of the range and kind of drifted down lower today for the rest of the day. The euro just continued to consolidate. The Aussie, similar to the broke higher but came back into the range. So the Great Britain pound and Aussie tried to push higher but couldn't get it through it. Now New Zealand, on the other hand, did continue to move higher and is in a larger range, but we're going to have to be careful with how the yen pairs cross, and I would keep a constant vigilance on the 4-hour candles to see if we get any reversals here, similar to what we do right here. See if we can get another commitment to another lower candle, and then we could have a little bit of momentum lower in that pair. All right, everybody, have a great weekend. Keep your eyes open for any post I put out probably by Sunday about the any post I put out probably by Sunday about next week's trading plan. If everybody have a great weekend, and try to keep everything keen, and good luck trading next week.